Yo, what is happening? What is happening, everyone? I hope you are having an amazing day. It's your boy, Master of Coin, IK Davis, your favorite entrepreneur, your favorite trader. And guys, I got a lot of people hitting me up asking me, really, what's the best way? What's the best way to be backtesting? How do you actually backtest? Kieran, how do I backtest? How often should I backtest? And really, how do you backtest? Because look, guys, I want you to understand, you see, practice does not make perfect. Perfect practice makes perfect, because if you're practicing the wrong habits over and over and over again, you're going to be reinforcing those neurological pathways that are not supporting you. So let's get right into how we really backtest. So the website that I'm actually using now is something called TradingView. You see, TradingView is it's a free website, obviously, to analyze your charts, right? So you just come to tradingview.com. Now, myself, I do have the paid version of TradingView because it lets me actually it lets me actually use the replay feature. So let's just come to a currency pair, right? Let's just say, Euro USD, right? Now, when it comes to backtesting, guys, the goal of backtesting is to basically practice the right habits, right? Is to successfully train your eye for certain concepts. So if we just clear this chart, right? What are we training our eye to see? We're training our eye to see certain concepts. So when it comes to backtesting, how do you go about backtesting? I mean, it's very simple. You see, what you can do is you can just come to any point in the chart and find a reversal point. So for example, let's say we want to go to this reversal point here, right? If we see this reversal point, why did price come here? Why did it rally up and then drop and then continue off in the downtrend? Why did that actually happen? You see, guys, the market is not random. It systematically is delivered over every time frame. So what you can do is you just simply come up here and place, a little point on that area. Now, if we actually start working our way back now, what we can start to do is we can replay the chart. Let's say we replay the chart. We can now do our top-down analysis from that reversal point and actually see what happened. So the reversal point was just this wick. Now, if we obviously take a look now in the chart, well, what do we see? I mean, on the daily time frame, obviously we can see it's institutional candle, right? Opening the 50%. So price reacted from this institutional candle. So, okay, cool. We now understand price reacted from that institutional candle. Now, if you look on a 12-hour time frame, okay, maybe not. Okay, the daily was good. The daily was good, right? So we can now work way down to a 4-hour. So where would we have entered this? Because if you think about it, if you're entering on a daily time frame, if you're entering off that 50%, your stop loss is going to be above this wick, which is 100 pips. This is ridiculous. But what we can do is we can scale it down now to maybe a 4-hour and see where we could have got that prime entry. Because all we're doing is we're training the eye. The purpose of a backtest is to train your eye. See here, what we can see price obviously come up and reacted from what area? From some sort of institutional candle within here, right? So if we maybe look us way down on the hourly time frame now, how convenient. What can we see? We can see within that daily candlestick, we've got this institutional candle, this imbalance fill, and that's where price reacted. So what we could have done, that would be a way where we could have entered. So we could have a stop loss just above the high. That's now that's a 12 pip stop loss. Now I'll take the targets again. Let's say this low. Now if we play the chart, let's see what happens. With that target liquidity below that low, okay, cool. If we would have entered that trade, that would have come down and that would have gave us a 1-to-13 risk reward ratio. So what we can do now is we can now practice, higher risk reward ratio trades by starting to scale in. Now, if we see what happened, price came back up to mitigate some sort of institutional candle up here. So again, this is a specific school of thought I'm using. So don't worry about the strategy, just worry about the theory. Look for where price reacted to. So for example, price reacted from this area. Now let's investigate. Where of my rule set would have told me to enter a trade there? Okay, we see this last little punch candle. And we see this last punch candle, this last buy before we sell candle. Right, this last wick. This wick got filled. So there's some sort of institutional play in there. Look on a 15-minute, what do we see? Okay, we're starting to see these institutional candles now. So what we could have done now is we could have used this as a future entry point. If we use that last candle that, come up to take all the liquidity, well, where is that? Let's have a look. Let's investigate that candle that took all the liquidity. This last buy before you sell candle, right? This last buy before you sell candle, you can mark up the open and the 50%, right? The open and just eyeball it at 50% just for now. We can see, look what happened. If we extend this, let's see what happens. If we extend this now, we can see but obviously price come up to react. So what we could have done is we could have now entered, off the open or the 50%, let's say they open, stop loss, again, just above the high, you could have come in for a re-entry. And all you're doing now is you're just training your eye to get these risk to reward ratios. You're just training your eye. Again, where did it react again? If we look on maybe a 50-minute time frame, it come back to mitigate. Look what happened. Where is price reacting from? If we go to the reversal points, that's what I'm doing. I'm training my eye now. We see a reversal point here, right? We see this reversal point here. Oh, wrong tool. We see this reversal point here, right? Where did that react from? Why did price come up here and reverse? What caused that to reverse? I mean, if you look whatever your strategy may be, we can find it. If you look on a 30-minute time frame, okay, you can see that little institutional punch candle. See on the hourly might be a little bit clearer. Perfect. Hour is perfect. Price literally came into the open of this last, a buy before you sell candle. Again, that would be another entry. You could have stacked this trade, 3 entries. 1, 2, 3. Now let's even refine it. If we go down on a lower time frame, we can see now areas where we could have got a lower time frame entry. Look here, price come up, broke structure, retested some sort of institutional candle and dropped off. So now if we start to scale in within this area, let's find more areas where price reacted from. Let's scale in. Let's scale in. Oh, what can we see? We can see that last buy before you sell candle. That last buy before you sell candle. You can enter off that. And again, guys, all I'm doing here is I'm just showing you how simple it is to backtest. I'm just going back and looking at prior examples. Stop loss just above the high. That's now 4.6 pip stop loss. If we was going to use that same target of where I was using on the original time frame, all we're doing is we're just reconfiguring our eyes. That's it, guys. You're just training your eye to see it. Boom. Now to that same target, that's a 1 to 30. Now all you're doing is you're just practicing. You're back testing. You're just training your eye to see these movements. Okay, let's look at the time of day. All right, cool. That was 1 p.m. New York Open. How convenient. You're starting to see what time of day are these movements happening. I bet what time did this happen? Oh, it reversed up here again. Look at that. Around 1 p.m. 12:30, 1 p.m. How convenient. Let's look up here. New York session, 2:30 p.m. Are you guys seeing it now? You're starting to you understand the currency pair. Guys, each currency pair has its own behavioral traits. So the purpose of a backtest is to study it and notice how the pair moves. Again, look at another reversal point. Price wicked up and then dropped down. Look where it reacted from. It reacted from this another institutional candle. So all you're doing is you're training your eye. You're training your eye over and over and over again. So all we're doing is just going to any point in the market and just finding where price reversed. Where did price reverse from? Where did price reverse from? Let's get the lines, get the horizontal ray. Where did price reverse from? Let's take any point in the market. Where did price reverse from? This wick here, right? Where did price come reverse from? Let's take it back. Okay, we see some sort of price action. Let's go on a higher time frame. Maybe it reacts off some sort of weekly time frame. And all we're doing now is just trying to find and investigate what caused this movement from our thought process, from our strategy. What caused that? If we now look again, okay, on the monthly time frame, I can't see anything here. Let's look on a 2-week time frame. All I'm doing is just training my eye to find where price reacted from. 3-week time frame. Let's have a look. Price probably reacted from some sort of institutional candle somewhere. It's just about training your eye to see where price reacted from. Where did that react from? Right, some sort of institutional candle in here. Okay, cool. In here, it reacted from somewhere in here. So now what we can do, we can now replay the chart and find, okay, cool, it's going on a lower time frame. Where did that react off? How convenient. Now, if we go to that area, look what we can see. We can see that, those institutional candles now. We can see those institutional candles. And we can now understand, if we expand this, we can now see a bit more of a precise area of where we could have entered that trade. Again, we just find the examples. That's all you're doing. You're just finding examples. Stop loss there. You know what I mean? Take profit again. Potential targets. These equal lows here. 1 to 8. Again, when price eventually kind of reacted off that, you can see it completely shattered and collapsed after that. So all you're doing, look at that. Look at the precision. And again, this is not me trying to say, oh, look, I just predicted this trade. No, I'm just saying, look, that's how you backtest. You just come and find these prior examples of where price reacted for in the past. And that's all it is. That's how you backtest this effectively. Cool. We can find any area and then just break it down to find an even smaller time frame. Any reversal point, any time frame. Boom, here. Right? Let's find here. here, this reversal point. What am I going to do? Take price back to it. Cool. What did it react off? What did this candlestick react off? Well, we can see, okay, cool. We've got this wick here. Some sort of institutional candle happened in here. We scale down now to an hourly time frame. Oh, boom, look at that. How convenient. We've got that institutional candle price reacted off. That institutional candle. Okay. So we could have entered off either the open and the 50%, right? Now let's look on different time frames. Let's find the best probable candle. You know what I mean? Oh, okay, look, we can now, this is the institutional aerial down here. We're now making our trade so much more precise. It reacted off here, right? So let's now investigate where we could have got a much more accurate sniper entry trade. Because cool, we could have entered one position here, right? No, if you're targeting these highs, cool, 80 pip take profit, stop loss just below the low. Yes, that's a 1 to 10 risk reward. That's phenomenal, right? But let's investigate. Let's now drop it down to a 5 minute. Let's see where we could have, got another snipe. Boom, look in here, right? We've got that lower high, lower low. Boom, break a structure, react off the institutional candle before the takeoff, right? So let's investigate. Now we can see, look at this institutional candle. Boom, there's been an entry down there. Much tighter entry. Let's look at a 4 minute. If you can find the actual candle. 3 minute. 2 minute. If you'll let me replay this far. 1 minute. Boom. Look at that on the 1 minute, the institutional candle. So all we're doing is we're just training our eye to find the institutional candle. We're training our eye to find it. Again, I'm not training you guys now on how to find institutional candles, but look, that trade's now a 3.5 pip stop loss. From a 1 to 10 risk reward potentially, it's now accelerated to a 1 to 22. So now you're training your eye to find that. Let's see if price actually come up to hit our target. And that's all we're doing. We're just practicing. That's all we're doing. We're practicing. We're back testing to practice. The replay feature is such a good investment. Like some people say, oh, I don't want to invest in it. But okay, if you don't want to invest in it, then how do you expect to go? If you can't invest in yourself, how do you expect to take your trading to the next level? You got to be willing to invest in yourself. Oh, I missed out the risk reward a little bit, but that was the entry. Let's see what happens. It come and hit our target, comes back down, boom, even come back down for another entry. So we could have now, okay, we're now practicing. Okay, why did that? It wouldn't have stopped us out. Would be still be in the trade, but where did it come down to react from? Okay, why did price do that? What happened? Well, let's see where it reacted from. It formed equal highs and it reacted off another institutional candle here. So you know what I mean? Okay, maybe I should have closed partials in that area. Maybe I should have closed partials in that institutional candle. But look what happened. We can see how it just manufactured liquidity. What happened? It just literally manufactured liquidity. So I'm not here to give you guys an in-depth strategy training here. All I'm saying is, look, this is how you backtest. You just look at what happened in the past and do it. Okay, cool. We can now stack that trade. That's all we're doing. Okay, now because all you're doing, guys, is you're training your eye to see how the market mechanics on your strategy. Now, boom. Again, that's another 1 to 16. If you can enter that trade 3 times. You can see we're just practicing, guys. That's all backtesting is. Backtesting is just about going back on the chart and just putting your time to train the eyes. Find reversal areas. Find areas where you hit stop loss. Find areas where you hit take profit. Find these different areas in the market which price reverse from, and that's all backtesting is. And you'll be able to find your rule set. Find the area where price reversed, and then look for your rules. That's all it is. Find the area where price reversed, and then look for your rules. That's all it is. Find the area where price reversed. Okay, cool. Price reversed here. Okay, cool. Let's take price back. Let's look left. At bet, price reacted from this institutional candlestick. How convenient. Okay, now let's scale it down. Where could I have entered that? You know what I'm saying? Like, guys, it's so simple. It's just about going back and just training your eye to see these different setups. That's all it is. Just train your eye to see the setups, guys. So in order to backtest, that's all you got to do. You just find an area where price reversed and take it back. As simple as that. Find an area where price reversed and take it back. Look at the origin of this big movement here. This big expansive movement, right? Where did price originate from? Here. Okay. So let's rewind the chart. What can we find? Let's have a look. Let's investigate. Daily time frame. What can I see? Again, my rules tell me there's this institutional candle here. This is my rules. Boom. Let's scale in. 4 hour, 15 minute. Let's find an area where we could have sniped the market. Got a nice sniper entry. Where was our last reaction? Okay, here. Right? Where did this react off? Where did that react off? Okay, let's have a look on different time frames now. What would we have wanted to see? Okay, maybe hour. Let's find a look. Let's find. Okay, cool. That last sell before you buy a candle, maybe a 2 hour, make it a little bit more clean. Okay, cool. That could be your entry. Boom, you know. Stop loss just below the low. Again, cool. 18 pip stop loss. And again, where was our potential targets? You know, we had a kind of target above this high, target above that high. Cool, that's a 1 to 16. Now let's play it out. Again, this is not to say, look at my strategy, look how good I am. I'm just showing you like how to practice. Now look what happens. We'll see if we just exit it so it can be quicker. Boom, it completely rallied. You know what I'm saying? It completely rallied. So what I'm saying, guys, is all back testing is just finding an area where price reversed and then looking left and finding out why it reacted. Investigate into the area. Investigate to why price reversed. And you're going to find different things based on your rule set, because you got to know what you're looking for. That's the key. You got to know what you're looking for. You got to back test your rules. I know my rules. Guys, this is my rules. And again, my rules are different, but this is my rules. This is what I look for every single time. Again, it's not a training on my strategy. It's showing you guys how to back test. But to back test, in a nutshell, know what you're looking for. Find an area where price reversed and then look left. It's as simple as that. And identify why price reversed. Find your rule set. Find the areas where your rule sets would have played out. It's as simple as that. So that being said, guys, if you've got any questions, you guys want to know more about the way I trade, about the strategy we employ, about how to backtest, feel free to hit me up on Instagram. My links will be in my bio, will be in the description down below. My Instagram is here at IK Davis. Hit me up, show me some love. And with that being said, I'll see you all at the top, man, because the bottom is way too crowded.